But let's do one thing. Let's talk about Galaxy Surfactants now. For Q4, their EBITDA declined. Margins also contracted because of higher operating expenses, although the other income aided profits this time around. K Natarajan, the Executive Director and Chief Operating Officer at Galaxy Surfactants, is with us to talk about that. Mr. Natarajan, good morning and thank you for being with us on the channel this morning. I want to just understand, your EBITDA actually declined quarter on quarter if you exclude other income. So there's definitely pressure that you're facing on the operational front. Can you tell us a little bit about that? What is the reason for that? And do you think it can get worse before it gets better on the operational front?
So it's essentially an impact of what we've been talking since the last 3 quarters is in terms of US and Europe coming back with regard to our specialty ingredients. We have seen some green shoots from beginning of Q4. We would expect that to continue, that momentum. And also the impact of the volumes on the Egypt business because of the Red Sea issue and the rerouting of various ships and impacting the supply chain. So we do see things going ahead being improving and turning around. We're looking at a volume growth of 6 to 8% and EBITDA moving up into the 20,500 to 21,500 per metric ton band. So
volume growth of 6 to 8% for FY25 is what you're looking at, and yes, EBITDA per MT will be 20,500. That's the range.
21,500, yeah.
Okay. Can you tell me, you said that you're seeing some green shoots in US and Europe. Can you just elaborate a little bit more on that, not just in Europe, but Middle East, Africa? What are the demand trends? Because that entire pocket was impacted because of geopolitical tensions, etc. When you say you're seeing green shoots, what kind of recovery are we looking at? Is it single digit? Are you looking at double digits this year?
Last quarter, in Q4, we had a specialty business registering a healthy volume growth of close to 14%. And that was because US, the destocking actually cycle probably ended by the last calendar quarter of 23. And that enabled us to get back our specialty volumes on track. Europe also is improving in terms of the inflation pressures coming down. And we do see the demand for special ingredients making a comeback. And we expect this momentum to continue. But say for any additional geopolitical situations emerging which are not in favor. With regard to the Africa, Middle East, Turkey volumes, we do see the demand environment is not critically impacted. But then what is important is in terms of how do we reach material on time and how do we get our incoming raw materials on time, given that the transit times have elongated. The system has adjusted to longer transit times, but we need to have the relief in terms of no additional geopolitical tensions flaring.
Right. Just a quick word, Mr. Natarajan. Morning.
Morning.
The specialty surfactants is what really did well, right? That is the higher margin business for you as compared to the performance segment. So it could, if that really comes back, as you're saying, US destocking, etc., is kind of behind the cycle, perhaps is getting over. Could that provide some upside to margins? It's a low volume but higher margin business. So could you give us some sense?
Yeah, surely it does provide us the ability to enhance our EBITDA in absolute terms and EBITDA per metric ton. But with regard to Q4, although specialty ingredients business increased by 14%, the mix in the specialty ingredients also is important, because what I started is the special ingredients that go majorly into the masstige and masstige products, which is a segment between mass and prestige. We do see the high-end premium specialty products which go into the prestige segment making a comeback, which will then start yielding results in the coming financial year. Plus also with regard to the last quarter, we also had higher expenses because of loss of operating leverage because of volumes in Egypt got impacted since the supply chain issue due to Red Sea blockade. And also with regard to higher freight rates that went up, and obviously we had some lag in terms of by the time we could pass it on to customers. Now those all have got settled down, so from here on we would see better numbers.
Okay, all right. Mr. Natarajan, hi, good morning and welcome to the show. Give us a couple of basic numbers, exports and domestic. What is the current split?
We're about roughly about 40-60, 40 in India, 60 exports.
Got it. And you expect it to maintain at these levels?
Oh yeah, we do. Probably in the 60-40, yeah, correct.
All right. And specialty care and performance products, what is the split currently?
That's about 38 to 62%. 38% specialty, 62% performance surfactants.
And you gradually see specialty take a larger chunk, say go towards 50%, or do you expect it to hover in this range because both segments are growing?
Yeah, both the segments are growing. This will essentially be always in this 65-35, 60-40 range. But what is going to be important is in terms of the composition of the specialty ingredients as to how we are able to get more and more share of the higher end specialty ingredients that go into prestige segment.
Okay, since you said 60% is exports, freight costs have gone up and there are various disruptions. When you're giving us this guidance of 20,500 to 21,500, it's taking into account the higher freight cost. And have you seen any disruptions to your exports?
The disruptions are the seas. It's a question of when the disruptions happened in November when the Red Sea blockade happened. The system couldn't adjust almost till January because all the shipping lines were rerouting. The transit times have enhanced, so now the entire supply chain has got adjusted to this elongated transit times. Availability of containers and space on vessels is something that's a challenge, but we are able to manage that. We don't see that being an issue moving forward. Okay, if it continues at the same pace, we have found a way to manage it.
Okay. Can you tell us exactly how much have freight rates gone up in the last, say, 6 to 12 months? And will that impact your EBITDA margins or your EBITDA per MT? Because you've said you'll be in this range of 20,500 to 21,500. But if freight rates continue to stay elevated, would that hit? And how much have they gone up by?
Freight rates, it depends on the sectors that we're talking about. So if you look at something that is from Asia Pacific into the Middle East, they have almost gone up by 60 to 80%. Okay, and some segments like India into Europe has gone up by almost 50%. But yes, the pricings have got adjusted to the higher freight rates. It's only that in the last quarter when everything went up suddenly, you couldn't have those renegotiated because you already have contracts that were running. Now all this has been pricing has been concluded, so we don't see an issue in terms of passing on the higher freight rates moving forward.
Okay. All right. We'll let you go on that note. Thank you so much for joining in, Mr. Natarajan. Appreciate your time here. That's Galaxy Surfactants. They're seeing some green shoots in terms of demand in both US and Europe. And they have a volume growth guidance of 6 to 8% for FY25.